And 72% of the time the market goes up. And the answer came to me. And that's where I developed my chart. The answer came to me is because it's like Caterpillar. When they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. Thank you for joining me in my podcast today. Hi, I'm Phil Grande. Well, we got another exciting day. Again, this whole thing with a peace agreement between Trump and Iran is just a bunch of nonsense, okay? It's never going to work. Iran aren't the kind of people you can make a deal with. We've known that for over 40 years. So, as I've been saying almost every day, the only reason why we keep trying to make a deal is so that Trump doesn't have to reignite the epic fury. Because if he reignites that epic fury, he's definitely going to lose the midterm election because oil will go up to 110, 150, maybe 100 a quarter. He knows that. Gasoline will go up, food will go up. So he's got to play this game, what they call a headline game. I'll explain what that is in a moment. So this game will continue. Otherwise, as I said, he will lose the Senate. If you lose the Senate, it's over because all the appointments you make, the benches, the federal bench, the state bench, local benches, but the big one, okay, is all at stake. The Supreme Court, that's really at stake. So Trump knows that, I think he believes that he made a mistake when he went in there. He should just finish this thing up early on, sent the boots on the ground. Everybody told me, you got to put boots on the ground. You don't win a war from 30,000 feet. You got to get those boots on the ground. Get rid of the Revolutionary Guard because they're on their own. Most people don't understand how Iran works. The Revolutionary Guard was under the control of the religious nut who Trump killed this year. They were devoted to the this nut, Khomeini, I think his name is, for years, since 1988, something like that. And it was like his personal SS. When he was killed, his son took over, but his son's not, they're not going to let his son do anything. The Revolutionary Guard split up into about 4 segments, or sections. So you have to think of each section has a top general. They're multimillionaires. They made a fortune, okay, in oil, and they all live in Dubai. And so they don't suffer like the people of Iran are suffering with no air, no lights, so forth. So my point is that as far as trading goes, we're in this vicious cycle now, okay, of one day you have your low yields, your low oil, stocks go up. Then the next day you have high yields, high oils, stocks go down. We've been caught in this. So that causes a real problem. So again, the place to be really right now in these stocks, there's only one place to be, is what they call the infrastructure stocks. Because the infrastructure stocks are the most important ones because the infrastructure stocks is the plumbing of all AI. And think of the AI data centers. Think of it, they do all the plumbing. Think of it that way. They've already been paid. They already have their money. The stocks that are AI infrastructure stocks, they have the strength because they don't have to worry about the interruptions of one day high oil, okay, next day low oil, next day yields high, oil high, next day yields low, oil low. We're not involved with that. So what we did is, here at Phil's Game, what we did is we were looking for a way that we could find a smoothing mechanism so that every day when we start trading, the same stuff happens, right, where we always get another movement in yields and oil. We wanted to go find a group that would be separate from that, and that's the infrastructure stocks. And the only reason why they're the best and where you make the most money is because they've already have their earnings locked in place, because they've already got all their money from the big guys like Oracle and Meta. They've already financed all these things, and now they're building them out. So it's that group of stocks that doesn't get hurt, okay, like the others do. So, for example, to give you an idea, when you have, let's take the machine stocks. The stocks, the machines that make all of the semiconductors, those are 4 powerful companies and big earnings. And the largest portion of the profits in the S&P, let's say the profits here today are 17%. Most of those profits are coming from that group. Now, and that's where you want it to be, because those were wonderful stocks. I mean, those just really kept moving and moving and moving, and that's where we were, and we still are. But now what's happening is they're starting to, the institutions and the traders are starting, the professionals are pulling their money out of those stocks and out of the stocks that support those machine builders. See, for example, when you have the machine builders like ASML, AMAT, LRCX, CLAC, and then you have a support group under Taiwan Semi, MU, and AMD, because those are the big players. They buy most of those machines. So if you take the 4 and take those 3, TSM, MU, and AMD, that's a powerful group. But what's happening now is this, is that if you look at what they call the Mag 7, Magnificent 7, or what we like to call is the AI mega caps, which is the same thing as Magnificent 7, well, those are starting to get sold off now. So the Magnificent 7, or what we also refer to as the mega cap stocks, those are getting sold off. And they're taking their money and putting it right back into the infrastructure stocks. You see where I'm going with this? So you have the machine makers, you have the companies to buy those machines. This is all that tech group. And then you have the infrastructure stocks to build out the data centers. And right now, the big money is decided to pull their money out of the machine makers, out of the AI mega caps, which think of Magnificent 7, and pull the money out of, as I said, the four machine makers and the stocks that support them, and go into the infrastructure. So that's where the money's going. That's what I'm trying to explain to you. So if you're in those infrastructure stocks and you know what you're doing, you're going to be fine. Now, but you also got to know how to sell short. So when this thing will eventually blow up, remember. I mean, look what happened. Iran just attacked Kuwait, and that just happened today. And so this ceasefire, come on, that's dead. And there's still the big risk is back on the straight. Oil's rising again. And there's probably, I would say, a 97% probability there's not going to be any rate cuts for the rest of the year. So you have oil spiking, you have yields spiking. And then to get those back down, Trump will come out with his headline flipping. This is where the problem comes in, and which Trump has turned headline flipping into an art form. Think about it. I mean, just think of some of the headlines. Great progress has been made. Every time we have a situation where the stock market goes down because of higher yields, higher oil, because Trump and Iran are grumpy with each other, the first thing Trump does is puts out a headline. It's called headline flipping. Great progress has been made. An announcement is expected shortly. How many times we've heard that? We're closing in on a deal. and our differences are narrowing. That was a good one. And the final aspects are near completion. We are within hours of a core agreement. All that is not true. None of it's true, because you're never going to have an agreement with these nut jobs in Iran, because they can't make an agreement with him. Because the people they got to make an agreement with are the generals, okay, and the Revolutionary Guard. But they're never going to make a deal. Why would they? They don't have to make a deal. They're all multimillionaires. Some are billionaires. They all live in Dubai. They don't have to make a deal. They don't care about the people in Iran. So Trump keeps on putting out these headlines to try to get oil and the yields back down. That's what you're living with as a trader. So you better understand that this is on a short leash. And now we're getting to a point, you got 12 stocks, okay, that are contributing to, I think it's 12% or 13% of the S&P 500 profits is year to date. You just got a handful of stocks, 12. And then when you take those 12 and break them down, you really only got about 5 stocks that are contributing to 700 stocks, holding up them all. So none of these headlines are true. So every time you have lower oil and lower yields and the stock market goes up, it's going to be interrupted again. So that's why we have designed a place to go to that's a smoothing mechanism. And those stocks, okay, those stocks are the infrastructure stocks, because those stocks build out the data centers. And they've already have the money to do that. So you don't have to worry about their earnings every quarter. So again, the problem is that 80% of the retail investors keep losing their money. Because what do? Okay, all they do is follow, okay, everybody on these TV shows. That's how they get their information. Now remember, losing money is not something new with retail investors. Okay, so even though they're losing money right now, and they're losing 80% of their money, losses predate Epic Fury. Remember, losses for retail investors go back to 1673, back to the tulip crash. That's when prices collapsed 90% overnight. This is nothing new for retail investors. So retail traders will keep losing money. They trade late. They follow the wrong signals. They have no patience. They don't let the trade setup come to them. It's always, what's the hot stock? I better turn on Kramer and get the hot stock. Or I better turn on, can't think of the other name, Payne. I better turn on Payne. He'll tell me what the hot stocks are. Matter of fact, he gives me a book that's free. It reminds me of the newsletter business in 2008. I think I've told you this. The newsletter business was humongous, a $50 billion industry. In 2008, when the market collapsed 54%, we lost $8 trillion. That industry collapsed from $50 billion down to $5 billion. What they find out, those newsletters are all BS. And it helped contribute to the market crash that lost 54%. Because it was all storytelling. And I think I told you this too. And that's when the Congress and the Federal Reserve got together, decided to print, I think, $18 trillion in new money, give it to the 12 institutions, the largest institution, with the 6 of the 12, the best, got most of that money, and they go in and they start buying the stocks. They're the ones that drive the market. That's who you have to follow. But retail investors don't follow the money. They never will. They'll always follow these dopes on TV. They follow the jibber jabbers instead of the money. If you follow the money and you know how to follow the money, you'll always be doing pretty well. I mean, all they do is look at that, CNBC, first thing in the morning, what are they buying? Ridiculous. So, of all these headlines, okay, remember that Trump's putting out there is driving this market. Okay, so as I said, we developed a strategy here at Phil's Gang that we identified the one section, the one sector, the infrastructure stocks. That is you could peel that away from everything that's going on. And those stocks are doing very well, and they're going to do better because of the 4 stocks that make these machines that are hugely successful. That money is going to rotate out and go into the infrastructure stocks. That's what's going to happen. And also, too, the stocks like, remember, the giants, think of Microsoft, Oracle, Microsoft, Oracle, Amazon, Google, Meta. Remember that they provided all the money to build these data centers out. And AI infrastructure stocks, they're the ones that come in and start building it out. They build out the plumbing. They're the plumbing. They're the water lines. They're all of it. And these companies are making a fortune. And so when we hear oil's back up and yields are back up, it doesn't matter. Or we hear oil's back down and yields are back down. It doesn't matter because they've already have their earnings in place because they got all the cash that was provided by these giants. And so that's why you've got to be in those sectors. And you also got to learn how to sell short. So when that dries up, you can make your money turning around selling short. You got to know how to sell short. And people refuse to do that because they keep hearing from the same people over and over on CNBC and Fox Business, it's dangerous to short. It's BS. That's total BS. And we have a chart that we designed in 1998. Over 225,000 people have used our chart where it guides you. You put it with your chart, and when you're looking at your stock and you're making a decision whether to buy or sell or hold it, you go and look at our chart, which is color-coded, and it'll give you great confidence. It works. But the idea that if you keep going the way you're going and just keep listening, it's just like the 401k. Think about the BS they're delivering you with your 401k. I heard that again over the weekend. 401ks are up 26,000. What a bunch of crap that is. You know whose 401ks are up 26,000? The top 1%. The people who make up this country. The workers, the families that make a combined $65,000 to $80,000 a year. Their 401k is not up, their 401k is down. Why? They had to pull money out. Why? Because bankruptcies are up 67%. I'm talking about the small businesses. Regular bankruptcies, I forgot how much, they're up like 20, 30%. But the small businesses are the one you got to look at because that's comes our labor market. And when you have a labor market with businesses up 67%, bankruptcy, small businesses, you don't have a labor market. So what's going on is these 401ks, they're up 36,000. That's a bunch of BS. People have no savings. They've been pulling money out of their 401k left and right. And by the way, this idea that you make a 6 to 8% return on your 401k is a both-faced lie. No, you don't. You make the most, if you're lucky, 3 to 5%. And that's if there is no great crash or no great correction. And you don't need a great correction. Just a 15% correction will wipe that out. So when they tell you in your 401k, when you go to work, they sign you up for a 401k, and they tell you you're going to make about a 6% to 8% return. That's a lie, because the hidden fees alone cost you 3% to 5%. The most you can make in a 401k, if you're lucky, with a good year with no corrections, and you got a good manager, okay, the most you're going to make, okay, is 5%. The spiders, you make 10%, even more if you're shorting. So again, we have all these, and the other thing that's going on too that people don't understand is all these cyclical stocks. Now, people keep jumping in these cyclical stocks, the industrials, materials, energy, and so forth. That's fine, but you've got to have the right setup for the cyclical stocks. So again, when yields drop, pros are taking money out of the cyclical stocks. But does the retail investor know? He doesn't know that. He stays in there and keeps listening to Kramer and everybody else. So when they tell you, remember, they'll always tell you the cyclical stocks are the economy. They're right. And the vital signs of our economy, remember, is oil, yields, and food. So our economy is XLI, that's the industrials, materials, consumer discretionary, and transports. That's our economy. So you got to follow those groups so you know what to do. The bottom line is, if you just follow the institutional money, you'll make money. And if you know how to sell short and follow the institutional money, you'll make money. Because let me end with this. Since 2008, since we had a 54% loss, $8 trillion was wiped out. And when all of a sudden the Congress and the Federal Reserve told Wall Street, no more storytelling, no more making up stories, all the lies you make in those in your newsletters, okay? We're going to put all this money into 12 institutions. 6 of the 12 are huge, huge. We are going to let them power the market. They power the market. That's the money you got to follow. If you want to make money in this business, you follow that money, the institutions. They have, think of it, 11 pipelines. We have 11 stock groups. If you look at the stock market, there's 11 groups. So think of 11 pipes connecting to those groups. And it's that money that they drive through that pipeline, whether it's a healthcare stock or a tech stock, okay, or airline stock. When yields are low, that money flies through those pipelines. And we can follow the money. We know exactly what stocks they're buying and what stocks they're not buying. Do you get that? When you listen to Kramer or any of these people on these TV shows? No. And when yields go up, guess what happens? All that money, when yields go up, that slides through the pipeline to go and buy healthcare stocks, go and buy tech stocks, go buy the builders. It gets all jammed up. The money doesn't get through. Do you know that? No. Wall Street going to tell you that? No. Is Kramer going to tell you that? No. So people don't change the way they trade. This is why you got 80% of the people, retail investors, losing money. So let me leave you with this. If you want to make money consistently, you've got to know how to sell short as well as go long. You've got to know how to read the market. You've got to know how the market works. Anybody that says, hey, you got a hot stock, you know right then they don't know how the market works. There is no such thing as a hot stock. That's like believing in Santa Claus. There's no such thing as a hot stock. If you're going to make money in the stock market, it's so easy. It is, because you just have to follow the money. But what makes trading stocks, this industry, so difficult, so hard, is you can't get the retail investor to be disciplined. You can't get him to wait for the trade to be set up to execute, no matter what kind of charts we give them. As soon as they hear somebody, a jibber-jabber, talk about a hot stock, they run and buy that stock. It's already up 90%. You got to buy stocks when they're on sale. How many times do you go to buy something? Don't you wait for a sale? Why don't you wait for a sale when you're buying stocks? You never do. You go to a supermarket, somebody will take the melon and sniff it and punch it and squeeze it and sniff it and squeeze it, put it down, bring it back up, stock? $5,000 going to buy it. They don't do anything. They, oh, okay. CNBC said, oh, it's a great stock. They're opening up more stores in one hung low city. Unfortunately, 85% people lose money because, again, they don't know how to execute. They don't know how to they don't understand the market. They don't understand. It's all you got to do is follow the institutional money. That's like if you're a kid in the school and the girl in front of you is a genius. You want to pay. You always make sure you got the seat behind her so you can see you look. All right. That's what we do when we trade stocks. You follow the genius. Okay, that's the money. I'll see you on the charts. Please be careful. Turn off those damn financial shows. You're going to keep getting hurt. All you have to do is learn how to buy a stock, sell a stock short, how to put a stop in, and how to identify what stocks the institutions are buying, which ones are they selling, what a difference it makes. And you can't do it with more than 6 stocks. You should not have more than 6 stocks all year long that you go long and you go short. I hope this has helped you, but please remember now, money will be rotating. It's just starting. It's going to come out of the 4 big chip machine makers. It's going to come out of the big mega caps. Everything is going to, as things get worse, everything is going to go into the infrastructure stocks. That's where the money's going to go. That's where the institutions are putting their money, in the infrastructure stock, because their earnings are locked in because they got all the money they need now to build out the infrastructure in these data centers. There's no more risk. I'll see you on the charts. Thank you for listening. See you here tomorrow at the same time, same place. philsgang.com, free for 10 days. Check us out.